Good afternoon. This is Tim Wegman with BIS Commodities, and let's take a look at where we closed for the week. Let's start out in the grains and taking a look at corn. July corn was up 15 cents for the week, is where we settled at 387 and 3/4. New crop corn, December corn, up 15 cents as well. Settled right at 406. Soybeans, July beans are up a little over 20 cents at 941 and a half in the July contract, up 22 in new. Nove beans at 948 and a half. Wheat was up 16, a little over 16 cents in the week at 445 and 3/4. Looks as June cattle settled up 42 and a half at 131.25, and June hogs are up $1.25 on the week at 82.47. At the time of this broadcast, it looks like the dollar is going to be up a little bit on the week, maybe 100 points, trading right around the 97.20 area, and crude's down about $2 at the time of this broadcast, right around 45.80, right on the bottom end of the range there. A little bit of volatility seen in the grain markets this week, and we're in a full-fledged weather market right now. The weather forecast is mixed right now. We are seeing some drying and some hotter weather on the horizon. Expect to see it this weekend. But I think what spurred it this week was Minneapolis wheats, or I should say the soft red wheat up in the Dakotas. The ratings on the good to excellent contract declined 7 percentage points, and what we've seen was a short covering rally there and spilled over into the other grains as well. And again, the uncertainty of Mother Nature is the driver here, but we also did have a report today. It's a monthly supply and demand report. We take a look at the old crop stocks and see if we're going to change anything there in the demand side of the balance sheet, and we did not in corn. We kept that carry out right at 2.3 billion bushels. We didn't change a thing on exports and or ethanol demand, and we carried that over into new crop corn. And some thought we might see a slight reduction due to the early season crop ratings are down early on this year in corn, but we thought maybe some were looking for a reduction in yield. We left it alone, left it up there at that 170 and change. So the carryout was unchanged in corn today, and the market was quiet upon the release of the report. Soybeans, we did see a little bit of change in the demand side of the balance sheet. We were looking for an increase in exports, a decrease in the crush on the old crop balance sheet. We did get the decrease in the crush, 15 million bushels, but we did not get the increase in export demand. So we did increase our carryout 15 million bushels in the old crop bean carryout at 450, and we carried that over into new crop beans at 495. So large carryout numbers for both old and new at this point, according to today's report. Now, we did see a little bit of weakness upon the release of the report at 11 o'clock today, but again, it's primarily about the weather. We're seeing the volatility increase in the grain markets as well. And that was proof this week as we've seen a record trade in corn contracts. A little over 1 million contracts traded on Tuesday of this week, and that is a record. And that's just a little bit over 5 billion bushels, about a third of our corn crop traded in one day on a 7-cent move. So we are seeing some outside trading coming into the market, so maybe we're seeing some high frequency traders, but needless to say, a lot of volume this week. Interesting enough, we have a fund that is short this market, corn, beans, wheat, what have you, and holding some record shorts for this time of the year. Now, we did get our commitment to traders report this week, and this is information through Tuesday this week. We did see that the managed funds bought back 62,000 contracts of their shorts. That leaves them short about 139. Again, that's through Tuesday of this week. Soybeans, they added to their shorts through Tuesday, 5,500 contracts. They're short around 95,000 contracts, still short around 106,000 contracts of wheat. They did pare back that a little bit as well. So the interesting thing in the the trade this week is we did see the open interest decline in soybeans and wheat as expected, where some of these short funds are covering those shorts. The interesting thing is we actually seen open interest increase in corn, suggesting new trades coming into the corn futures, which is a little bit of a head scratcher trying to realize what's happening there. But again, certainly it's going to be all about Monday morning, actually Sunday night's trade. We're going to take a look at the deferred weather forecast. GFS, the American model, has been wetter. The European model has been drier and has been more accurate as of late. Taking a look in the livestock markets, cattle this week was a violently sideways trade. We've seen a very choppy sideways trade in the futures market all week. Very little cash cattle at the time of this broadcast is traded yet, but we are seeing a little bit firmer trade. We're seeing some 220 trade in the Corn Belt in the meats, and we're seeing a little bit of 137 out there. There could be some trade after this update. Maybe we'll see some trade tomorrow morning. Maybe we'll hold off to next week. But again, violently choppy sideways trade in the cattle futures this week. Cash still seems to be the driver of this thing. Boxes have held in firm. Most analysts are believing that we're going to see some seasonality weakness coming into play here. But I think demand has surprised most analysts to this point in the season. Obviously, a warm weekend, maybe you see a little bit less grilling demand. But certainly the question is, when will this supposed wall of cattle show up versus a reduction in demand? Again, boxes holding quite firm in here, not getting stronger at this point, but holding. We'll see what cash does, if it does anything this week, and we'll take a look at that trade Monday morning. Hogs continue to, the hog futures continue to trade in a sideways manner over the last week as well, closing at the top end of their charts today. Pretty quiet day in the hog futures. We are seeing a premium in the futures over the cash. Cash is held firm this week, pushed a little bit higher. The cutout, pork cutout, has held firm, pushed a little bit higher here as well. Certainly some hedging opportunities in some of these deferred contracts for some open hogs out here. But taking a look at the June contract, which is expected to expire, or is going to expire next week. It is trading at a premium to the cash index and cash right now. So the question is, are we going to see some improvement in cash next week as well? Or are we going to see that convergence of the June sell-off that come in to meet the cash contracts? Yet to be determined. But again, take a look at those deferred months. Probably an excellent hedging opportunity. And I should state in the cattle as well, if you have some open cattle out there, feeders are stronger. If we're bidding up for those feeders, make sure we get some protection in place, some of those deferred months, if we can lock in a profit. So if you have any questions about these or any other markets, please feel free to give us a call here at BIS Commodities at 1-800-373-2525.